Good afternoon, ladies and gentlemen. This is going to be a semi-interesting video, I guess. Excuse the noise. I'm in a new location at the current moment. I just got done traveling for like 2 days. I'm somewhere not in the United States. And I have more neighbors now, so it's going to be probably loud sometimes, but so this video was the last time I was actually like trading on live data. It's not the last time I was looking at live data, but it's the last time I traded and recorded, just because I was getting ready to leave on Thursday, and I don't know, I didn't really have the mental bandwidth to trade. Wow, he's really playing that music pretty loud. I was playing music earlier, that's probably why they're doing it. Probably annoyed them. But okay, so this video is kind of like, I feel like, has anyone ever told you like, don't do this? Like, has anyone give you advice not to do something, and then you're kind of just like you kind of just say like, yeah, sure, I'll take that advice, but deep down you kind of just want to see it for yourself. Like I guess learning the hard way. Do you ever just feel like you have to learn the hard way sometimes? Yeah, this is that video. So pretty much my teacher advises us not to trade between macros, and a macro is like a set of code that the algorithm executes. It happens every hour for 20 minutes. It goes from, I'll just use these times for examples, but it happens every day or every hour from 9:50 to 10:10, and then 10:50 to 11:10. It has a 20-minute window that the algorithm will execute a certain delivery on price. Here you see I'm trading in between those macros, and on this week it was a big week. It was FOMC week. It's like I'm not super well versed as to what they actually do during this week. I just know it's a huge week on the economic calendar, and it causes price to either be really volatile or really lethargic. In this case, at least for the morning session, it was real lethargic. As you can see, price is literally going sideways. Like, okay, the little dip right below where I got into the market, that was like, a significant move for the morning, because it was just so sideways. And especially like trading in between the macro, when the price, it doesn't have so the FOMC was actually the day after this. It was on Wednesday, and but the whole week is just kind of washed out because of that high impact news driver. So pretty much they're manipulating price to give them like great runs on liquidity on that day. So I already knew it was going to be pretty slow, but you got to throw yourself into these market environments, these unhealthy market environments, to see and experience them, or else when you run into them, you're going to be like, oh shit, well, I'm going to trade like I would every other day, but really you should be risking less and trading with less leverage. So here I'm trading between macros. I'm really feeling the sting of having to wait for price to execute and go somewhere, because as you can see, it's just going sideways. It looks like a picket fence, and no one really is, or me, I'm never really comfortable when price is going sideways like that. It's like really unpredictable. You want to see displacement away from the gaps that I have annotated here. The big gray gap is a sell-side imbalance, buy-side inefficiency on the 15-minute. That's why it doesn't really align with the 5-minute chart you see on the right-hand side, because it's from a higher time frame, from the 15-minute, and then I dial it down to the 1 minute and the 5-minute. So you don't really get the whole picture here, but we'll see what happens here. See, like, trading in between macros, you can already see how long you have to wait for any type of price fluctuation, and it's really test your patience. And I already don't feel comfortable like as you can see, I'm trying to close, like getting ready to close a position because I'm not like it's not a really healthy market environment, and I feel that, I feel like I need to take something off the table like soon here. And I think I do. I don't remember. It's been a while since. This is the first time I really looked at this video since Tuesday. It's now freaking Saturday, or Saturday for you guys, and it's an interesting song to play. Yeah, it's a weird song to play considering you can't smoke weed. I guess a man can dream. I think it's a girl playing that song. It's weird. Anyways, so yeah, no, but still, even though I didn't like, I'm not here to like show a bunch of bangers where I'm making like all this like money. I mean, I'm not really making any money in general. It's still paper trading, but this is like really good things to learn. I feel like imagine I've never put myself in an uncomfortable market, and then just all of a sudden down the road in my career, it like I encounter it, and it's like it just throws me off. So my stop is right under a 15-minute PD array. That's why it doesn't really make sense here. Man, already starting drama over here. It's like my first day. Yeah, the rooms are real close here, like really close. But oh my gosh. But yeah, pretty slow video, but still, I mean, I learned something this day, and even looking back on it, I realized like how sluggish price was, and how I don't like, after doing this, I know now that I'm only going to look for setups during macros when price is supposed to execute, because then you'll have to wait less, and you'll have to be like, I don't know, it's just more reassuring when the price is moving into the direction that you want it to, rather than just going sideways. So right here, I know, like, I gotta take something. Like, I think I closed the whole position here because like I was just uncomfortable there. But I do try again. I don't know why I was so obsessed with price going up. Then I was also practicing getting into trades on down close candles, because when price is like, you never want to buy price as it's going up. You want to buy it as it's in a discount. So here I have a premium array, and I want to buy on a white wick if I think price is going to go up, because a white wick means it's a sell side, which means it's a discount if price is going to go up. And right now in my mind, price is going to go up, so I'm going to wait for the next white tick, and then I think I enter the market again. So I barely got out with a little something on the last trade. And I'm just trying to see if this idea pans out or not. So again, the market, I'm pretty sure on the next down close candle that hits that gap. There we go. Because now, technically, if price were to keep going up, I'm buying at a discount here. But yeah, I mean, as you can see, price is just like really not it between macros. It's been sideways for I think almost 15 minutes now with no real movement. And that's why I was advised not to trade between macros unless it's like a huge like impact, like high impact news driver, and it's gonna be really volatile. Then maybe, but it's always best just to wait for macros. And I knew that because of the lectures that I watched, but I've never actually thrown myself in between macros. So I guess the only exception to that would be the opening range, like from 9:30 to 10 o'clock, because it's really volatile then, because it's the opening bell, opening range. I don't know, there's so much rules to trading. It's like infinite. I'd imagine I'm not like super good at this until like 2 years from now. There's just way too much to learn and see. Like, you gotta see every quarter, because every quarter behaves differently too. So I've only really seen maybe one whole quarter or 2 whole quarters. Honestly, like, yeah, 1 whole quarter so far. I've seen live price action. So yeah, once I get through a whole year, through a whole quarter of looking at live price action, then I'll be able to have some data or some experience under my belt, I guess. Yeah, price is respecting the PD arrays that I'm outlining, but it's still not really executing how I would like it to. So now I'm aiming for this short-term buy side liquidity on the 5-minute. It's just right above that BD array, but it's good enough for me to take a partial once it closes above that. Australia is super humid. There's big spiders here. Marijuana burns, we could take our turn singing them dirty rap songs. Yeah, so over here, the opening bell for New York is at, I think it's 10:30. 10 o'clock or 10:30 is the opening bell. So I'll be able to see the morning session for sure, because I might have to wake up early some mornings, but I'll be able to, if I can stay up till midnight and watch the New York morning session, I think I'll still be able to get enough sleep for the next day. That's usually what I did anyways. So yeah, pretty happy I'll still be able to see live price action. It's not like in the middle of the day where I might be busy. Does it take out the short-term high? No, I'm getting ready for it to take out the short-term high here. So I take one contract off here. I think that was like $500 or something. And then once I do that, I just I take all the risk off the table. So I took a partial for around $400. And then after that, I don't really care about being like super right. I'm just gonna wait for the next criteria for me to get out of the trade to be hit, which would be 75% of my goal or of my target. So right here, I'll outline in just a second the quadrants, and you'll see how it plays out here. But right now, I have all the risk off the table. So if a nasty wick were to just come down real quick, I still made $400. And I got to see a trade pan out. So it's not all about trading. Is like, it's not about being right, it's about making money. And some people, they like need to be right so bad that they'll literally lose money just to try to force their trade idea to pan out. You're gonna be wrong more times than you are right. I mean, what professional sport is there that like you're right 100% of the time? None. You gotta treat this the same way, because it's technically like super hard. They're trying to predict the future on a market that's rigged and like going against you. Just how like when you go to the casino and play blackjack. Except if you follow your rules and you have good technical analysis, now the favor's in your hands. But if you break the rules and you have poor technical analysis, then you're just gambling. So yeah, I really like that. I took all the risk off the table. That's a habit I really like want to get good at. And then I'm waiting for the price to hit that 75% mark. If it were to hit that, I would have been out of the trade, just because, I mean, look how price is behaving. It's like displaces and then just stops. And it kind of makes sense because that white box you see is the sell side and balance, buy side and efficiency, which is supposed to send price down. So right there, I'm already kind of getting like my feeling, like I'm kind of feeling like, oh, like there's a rejection. Like this is rejection off that fair value gap, which means that buy side isn't really strong right now. So like I'm already kind of anticipating some rejection of this PD array. But it gets real close to my 75 mark. And of course I could have sold there and just, you know, made a little bit more profit, but if it's not hitting you gotta follow your rules. If you don't follow your rules, you're just out here running blind, you're just gambling. You're letting your emotions take, like during this moment I was like, dang, I should probably take some money off the table. But you gotta practice taking all the emotion out of your trades. You already have no risk on the table. The only thing you're risking is the lot size. And I already took a partial for what, like $400 to $500. So like you gotta take those partials, give yourself a pat in the back, and just watch the trade pan out. That's how you gotta start off. And you see there's some like pretty strong rejection from there. And right here I'm pretty like, since it did hit my 75 mark, I'm like, alright, it's probably gonna get stopped out, but you know, at least I took the partial and took the risk off the table. This is a good learning experience. So like trading between macros is just so slow and just not really healthy market delivery today either. So you got to be able to identify when the market's like this, and then just take money off where you can, and then minimize risk like immediately. You know, that's just what it is. You're a professional. Like, to be a good trader, you have to be a professional risk like management. Like you just got to be really good at managing your risk, is what I meant to say. Because if you're not, then you're just not going to be able to make any money ever. If you're fighting every time to be right, it's just not going to work out. But yeah, that was it. That was kind of dry, but good lessons to be learned in this video for sure. I'll be making some more soon. Peace.